Zillow is out of the home buying game. What does that mean? Are we going to see a crash? What is the data telling us? How does that affect you? So let's go over the numbers real quick. Depending on where you look, Zillow has lost anywhere between $1/3 to $500 million this last quarter. They've let go about 25% of their entire workforce. Almost 10,000 homes are being shopped directly to other investors. 8,200 homes are now being listed on the MLS with an average of 3 to 5% less than what they actually paid for it. And at the time of this recording, their stock is down almost 30%. Now let's go into what those numbers mean. So for one, we're looking at almost a $500 million loss. And for people like you and I, that's insane. The number is almost unfathomable. But for companies like Zillow, it's actually not as big of a deal as it sounds. They're exiting what is kind of a wholesale, kind of a fix and flip model that they've been doing, the we buy houses. They haven't done well at that. And what I think is very, very interesting when we talk about this is keep in mind Zillow is probably one of the largest data companies, if not the largest data company in the whole real estate space. So they're a big player, they have a lot of data, and still they were buying these homes and taking a loss there. How is that even possible? Well, to be honest, and I've always talked about real estate is a hyper-local market. You want to be working with someone who knows what's going on in that place, who knows how to buy homes, who knows how to sell homes, because even this huge company, who again has more data than anyone else, has done this and taken a big loss. So let's talk about some of the mistakes I believe that they made. Some of this is opinion, most of it's based off of fact, but full disclosure, it's a mixture of fact and opinion. So the top 3 things that I think they did wrong is one, they were buying off of speculation. We saw about a 30% increase in price from this time last year to today. And some people thought, hey, we're going to continue to see this go up and we can ride this merry wagon forever. But that's not the case. Real estate always has its ebbs and flows. And when you buy real estate, you want to be buying for cash flow. You want to buy something that if you needed to hold on to for a long time, you could. You don't want to buy something that's going to keep you super broke in terms of monthly payments and monthly income just because you think it's going to go up in price. That's buying off of speculation, and it's kind of real estate 101. You shouldn't do that. Number 2, I believe that they went into this kind of with the wrong mentality. They see, everyone thinks that real estate there's lots of fees and there's lots of things that could take place here and closing costs. And, some of that is true. Whenever you transact in real estate, there's a good amount of fees associated with it. There's your closing costs. If you're doing loans, which Zillow really wasn't doing it, but it's worth noting, you're paying for your loan origination fees. If you're doing it through hard money or private money, Zillow is doing some of theirs, again, through investors' money, but you still have to pay a return on that. Investors want a return on that. So there's always costs associated with doing a real estate transaction, and you got to make sure that you're calculating those very well. And going back to point 1, whenever you're buying real estate, make sure you're buying something that if you needed to, you can hold for a relatively long time. And the third one, I think, is just buying real estate and being an investor in real estate is a lot of work. Sometimes I think in the tech industry or other industries who are looking outside in, they're thinking real estate's easy, no problem, just throw money at it and the problem resolves itself. And that's not the case, especially when you're flipping homes. Even if you're doing just some light renovation, you've got to oversee contractors, you've got to oversee the whole project, you have to make sure it's going fast enough. The longer it takes, the more money you're losing. There's just a lot of moving parts that go into real estate, and people can do it at scale, but your systems have to be incredibly, incredibly good. And I think Zillow is good at data. I think they're good at generating interest. I think they're good at selling your information to real estate agents, to be honest. But that's what they're good at, and that's where they've made their money. So for them, I actually don't think it's a bad move to get out of a space that's a lot more work and to double down on the space that they're good at and where they performed and they continue to perform well. So with all that being said, I think overall for Zillow, it was a good experience. They probably obtained a ton of data from doing all these purchases. So, for them, maybe it was worth the loss that they took there. And I think their stock will bounce back a bit. But overall, I don't know. I don't know what's going to happen to Zillow. Some people are like, is this the death of Zillow? I highly doubt that this is the catalyst that's going to kill Zillow. I think they're actually going to continue to do well, just do well what they've done well. So Zillow will be selling 7,000 homes. To be honest, that really doesn't even come close to affecting what's going on with inventory. That's not going to be this big flood. In regards to nationwide and even in the markets that they work, that's not going to be a lot. And most of their inventory, they're actually going to resell over to other investors, other hedge funds, bigger people. You and I will actually never even see that inventory. Most of it will be sold to them, and then they're just going to work it out on that end. But that's also another really good point that we'll talk about, and we've talked about in other videos, is hedge funds are actively buying homes in your area, and they're here. They're here to stay. You've got to be ready to be competing against those people as time goes forward. So top takeaways over everything that we talked about is Zillow's taught us a lesson. Even though, you might have an idea, even though the numbers on a spreadsheet say something, real estate is in person. It's hyper local. You've got to know what you're doing to get these deals done, and you have to make sure that you're doing it and building it at a good rate. Even this big tech company has come into this space, has come into real estate's investing space and lost. So be aware of that. Learn from their mistakes, go off, and I wish you guys well. And again, make sure when you're investing and when you're working in real estate, you're working with someone who's hyper local, who knows what they're doing, and who can actually get you where you need to go.